Have you ever wondered how overconfidence could be sabotaging your investment decisions? Today we'll explore the fascinating world of probabilities and how understanding them can transform your financial mindset. Welcome back to WildPod X, Tony here. Today is 25th of February 2025. Let's first take a look at today's market update. Bitcoin experienced a 5% decline yesterday, currently trading at 91,000. Naturally, a lot of people are starting to get frustrated with this consolidation phase. Sentiment is shifting. Patience is wearing thin. And you can already see the usual complaints. Why isn't Bitcoin moving? Is it at the top? Should I sell before the next drop? But let us take a step back. It's only been 3 months. In the grand scheme of investing, that is nothing. We're talking about an asset that historically has taken years to reach its full potential in each cycle. If you're aiming for life-changing wealth, can you really not handle a short period of sideways movement? And the reality is that most people don't lose in crypto because of bad investments. They lose because they can't sit still. Impatience leads to emotional decisions, and emotional decisions rarely lead to profit. Zoom out and try to look at the big picture and remember that the one who win in the game aren't the one who panic at every dip. They're the one who understand the real gains comes to those who wait. Now let's get back to today's morning deep dive. Most people don't realize how bad they are at judging their own certainty. Decision scientist Ronald Howard saw this firsthand when he introduced a unique scoring system to test it. Instead of just making answers as right or wrong, he asked students to rate their confidence. If they were completely sure about their answer and the answer is correct, they get all the points. But if they're wrong, the penalty was harshed. The results were eye-opening, because people think they were accurate, but their confidence didn't match the reality. The tendency is that we're being more sure than we should be. This shows up everywhere, especially in investing. Traders, crypto enthusiasts, and even so-called experts make decisions with absolute conviction, only to be proven wrong again and again. So what we can learn from this is that understanding probability isn't just for academics, it's a crucial skill that separates smart investor from reckless gambler. Let's get into why thinking in probability can protect your money and help you make much better financial decisions. So let's get into the detail of this experiment. Ronald Howard, a pioneer in decision analysis, introduced this unique scoring system to teach students the importance of self-assessment. By assigning confidence level to their answers, students learned to gauge their certainty and confront their bias. This approach reveals a common human flaw. We often overestimate our understanding, lead to overconfidence in our decisions. The studies has consistently shown that people tend to be overconfident in their knowledge, even when they're completely incorrect. For instance, when individuals claim they're 90% confident in their answer, they're often right only in about 70% of the time. This overconfidence isn't just about exams or academic concerns. It's actually about real-life decisions, especially in investing. Investors might believe they're making informed choices, but their misplaced confidence can lead to significant financial missteps. In the world of investing and risk management, thinking in probability is crucial. Consider the concept of expected value. A low probability, high reward investment, like Bitcoin in its early days, can be a rational choice if the potential payoff outweighs the risk. Casino and insurance companies thrive because they accurately assess their probabilities, ensuring over time the odds are in their favor. Training yourself to think in probability can enhance decision making in various aspects of life. In personal finance, before investing in a stock or cryptocurrencies, assess your actual knowledge and assign a confidence level to your decisions. Acknowledging that uncertainty isn't a sign of weakness, it's a strategy for better risk management and more informed choices. Traders often employ probability models and risk-adjusted strategies to navigate the volatile crypto market. Understanding expected value helps in making decisions where even a losing trade can be a part of profitable long-term strategy. Beware of the illusion of certainty in price prediction. Narratives can suddenly create overconfidence, leading to misguided investment. By embracing this principle of probability and recognizing your own bias, we can make more informed and rational decisions both in finance and life. Now let's take a look at today's top news. The first news, Michael Saylor's company, Strategy, has made a bold move by acquiring an additional 20,356 Bitcoin for nearly $2 billion. Bring their totals holding to over 499,096 Bitcoin. This significant investment underscores their unwavering confidence in Bitcoin's future. We have to understand that BlackRock, the world's largest asset management, is the biggest shareholder in Strategy. So we gotta ask ourselves, do they know something we don't know? What kind of price do they see Bitcoin in 2 years, 5 years, or even 10 years' time? The second news, this author says that the cryptocurrency market is experiencing anxiety ever since President Donald Trump announced his plans of tariffs. These announcements has caused the crypto fears and greed index to plummet to a score of 25, indicating extreme fear among investors. The looming trade war and the potential economic repercussion are contributing to this negative sentiment, leading to a broader market decline. The third news, in a controversial move, Elon Musk, leading the Department of Government Efficiency, issued an email demanding all US federal employees list their achievement from the past week, or be considered as having resigned. This directive has been met with confusion and resistance from various federal agencies. Senior officers, including those from the Justice Department, have advised their staff to disregard the email, citing concerns over authorities and confidentialities. The American Federation of Government Employees has criticized the request as disrespectful and beyond Musk's jurisdiction. The situation is still unfolding, and the reaction from both government officials and the public continue to pour in. We'll keep tracking this drama and bring you the latest update in the coming videos, so please stay tuned. That's a wrap for today's video. Please subscribe for daily updates in weekdays. Stay invested, and I'll see you tomorrow.